Hi, good afternoon, everybody. Thank you for joining us on this inaugural Africa Oil Week webinar. It's great that so many of you from around the world can join us. So good afternoon to some of you, good evening indeed to our friends over in Asia, and good morning in North America. We're really pleased to introduce our first webinar, which is the promise of Mozambique, updates on building a natural gas hub. My name is Tom Quinn, and I'm the head of content here at Africa Oil Week for Hive Group. Before I introduce our moderator, who will lead the conversation among our experts over the next hour, I just wanted to set the scene in terms of Mozambique and the region that Africa Oil Week has been following with great interest over the last few years, as I'm sure many of us have. It's the energy development of the last decade has really been at the forefront of all African oil and gas from Mozambique, and it evokes a vision of what future energy projects may look like for other African nations. Some estimate that the Mozambique mega hub could become the fourth largest LNG exporter in the world, which would radically change Southern Africa's influence in the world. The emergence of a significant gas hub in Southern Africa is providing lessons in stakeholder engagement, project finance, and global industry collaboration, all the way from pre-FEED to operational implementation over the next few years. So today, I'm joined by a number of experts from different perspectives in the natural gas value chain. We'll be looking at points including how Mozambique LNG supply will impact the global industry over the next 5 years, what the current impact of the pandemic and COVID-19 has been on the project developments and general market drivers, how Mozambique and Southern Africa can secure and upskill the workforce needed to achieve its ambitions, and really what will this mean for Africa's energy security into the next decade. So without further ado, it gives me great pleasure to introduce Dexter Wang from S&P Global Platts, who will be our moderator for today. Dexter is based in Singapore, the Asian LNG market lead for Platts. Over to you, Dexter.
Thank you, Tom. Allow me to introduce our panelists today. So we've got Paul Erdley-Taylor, who's the head of oil and gas for Southern Africa at Standard Bank. And we also have Trey Armstrong, Managing Director for Project and Structured Finance at EXIM Bank US, as well as Mario Fernandez, who is the Mozambique oil and gas leader at Deloitte. So I guess first of all, we have about 40 minutes for every panelist to talk us through what they see in the market and what they think the impact of these mega projects would have on the local community as well as internationally, and what they see are the challenges of future developments. So before I pass on to our panelists, I just have a slide to share with you. So this is a chart showing you current LNG price of the road. First of all, let's look at the pink line, which is Brent-linked long-term contract price. So before the oil price crash in March, we saw the long-term contract LNG price was fluctuating between $8 to $10 per MMBTU, which was a relatively decent price, even though it's several bucks off from its very high level previously. But if you look at the yellow line, which is the spot price for Northeast Asia, assessed by Platts, the JKM, it's the delivered price for cargoes delivered into Japan, Korea, Taiwan, and China. You can see the spot price has completely detached from the term pricing, and a main driver behind is the oversupply in the market, and as especially because of the second wave U.S. supply that has hit the market in the past 1 year and a half. So we are facing this dilemma that created by mainly the oversupply, as well as the current demand destruction caused by the lockdown from the COVID-19 situation. At current price level, if you look at it, especially the spot price level of $2 per MMBTU, absolutely no project can actually sustain itself at current price levels. If we look at even the dwindling term contract pricing, also with current crude oil price being relatively suppressed at the moment, even if we saw the recent rebound in the past 2 weeks of crude oil price rebounding above $30, you can see the term contract pricing equivalent is still roughly about $5 per MMBTU, which is probably a lot less than most projects when they were confirmed and FID'd. Nobody would actually imagine such low price in the long-term contract as well as in the spot market. So I guess a very important question would be, how would we see all these projects going forward, and will the market actually rebound to a pre-COVID situation or pre-oversupply situation? With that, I want to pass the stage to Troy, who will give you a better introduction, especially on the financing point of view of the projects.
Thank you, Dex. Really appreciate it. Thank you, Paul. My name is Trey Armstrong, as mentioned earlier, and I'm a managing director at EXIM Bank in the Structured and Project Finance division, and my sector is focused on oil and gas and commodities and power. Just to provide, as you may have noticed, I guess EXIM Bank recently financed, or the board of directors recently approved the financing of the Mozambique LNG project. We call the Mozambique LNG project Total's Area 4 development, and that authorization was approximately $4.7 billion. Just for the people online, I want to give you a little bit of background about who we are, EXIM Bank, and a little bit about what we do, and just a little bit how important this particular transaction was to the agency. So EXIM Bank is an independent federal agency. Our mission is to assist in the financing of the export of U.S. goods and services to international markets. And really, this is an effort to boost employment. The idea is that create jobs through exports. We're a member of the OECD arrangement. We provide direct loans, loan guarantees, in both U.S. dollars and foreign currencies. The guarantees are in foreign currencies. We also provide some short-term insurance as well, and short-term guarantees as well, the export credit insurance program, working capital guarantees. We have a long history of being at the forefront of financing projects important to both U.S. exporters and international customers, and particularly in times when access to long-term financing is really constrained. And later down in this presentation, I'll show you kind of a fluctuation where EXIM Bank has come in and really been active when markets have been constrained. Our financing usually is a pretty cost-effective source of financing for international customers purchasing U.S.-made technology. Below is listed of what we call our SEER. It's called the SEER rate, but it's really our fixed direct loan rate, and it's based on a Treasury forward curve. This is a type of lending rate. We provide a direct loan for the Mozambique LNG project, and this is a type of some of the lending rates we would have looked at. For an 18-year fixed direct loan right now, currently it's 1.876%. And for a 12-year loan, it's 1.55%. 18-year tenors, this is an 18-year tenor. That's usually what repayment terms for what we call our renewable market. For the oil and gas sector, it's usually we provide tenors up to 14 years. going on to the next slide. One thing that's interesting about EXIM Bank is specific to our charter is that we must finance, U.S. goods and services. We do provide some local cost support too as well, but it's usually a derivative of the amount of U.S. goods and services we provide. And we also must have a reasonable assurance of repayment. I'll talk to that in a moment. Of note for this particular presentation, we do have a congressional mandate to support transactions in sub-Saharan Africa. Let's go on to sort of repeat of an earlier slide. Let's see, so going to our approach to lending, we must find a reasonable assurance of repayment. There's like three types of projects or transactions my group will look at. One is corporate financing, which is financing a transaction on a particular, maybe a state-owned utility, their balance sheet. This is usually one of the easier ones to underwrite, and we look at a current credit report, current commercial bank references, and usually it's a company that has historical financial statements. We typically look at the last 3 years and based underwriting decision on that. The in between this is probably the third item, which is structured financing, which is we'll do a combination of a limited project financing and a corporate financing, where we might use a borrower's balance sheet with some special features. This can kind of be a good approach for loans in a smaller amount, maybe up to less than $20 million. With the Mozambique LNG project, it was really, you kind of have what you have like a special purpose company or special purpose vehicle as the borrower. And you look at the project's cash flows as a source of repayment, which sort of ensures that we'll get paid. Ideally for these types of transactions, you want a greater amount. They're usually pretty big ticket items, usually greater than 20 million, because you have to address the legal and financial due diligence associated with underwriting these transactions. With these types, again, like the Mozambique LNG transaction that we financed would have fallen within sort of these parameters. You sort of look at these kind of items when underwriting these types of deals. You look at like sort of skin in the game. Is there significant sponsor support or contributions provided by the project sponsors? Desired leverage is always negotiated. Often, you could look for targets of 60-40, which is debt to equity, or 65-35. It does vary. It's never necessarily a hard number. It's really based on the overall project economics. There's also some credit enhancements that you'll negotiate. Try to look for a debt service reserve account to cover missed payments or shortfalls in payments to the banks. You can also have robust liquidity reserves needed in the absence of fixed price offtake contracts. And in addition to credit enhancements, you often have in these types of transactions completion guarantees or some kind of debt service undertaking. Your biggest concern about these types of projects is, as you can imagine, is getting to completion. And so in the event that you can't meet a date specified or you skip a completion date, you can always rely on these debt service undertakings to service the senior debt. You also look at the construction risk, the EPC contracts, and it's, as you can imagine, it's important in these current environments. How robust are these? Are they lump sum turnkey contracts? Do they address cost overruns? And a lot of times too, is you're looking at how much experience the individuals have constructing similar projects. What's interesting here is kind of alluded earlier is that EXIM Bank has I won't say we're totally offline, but as you can see from this number, we were very active up to 2010, 11, 12, and you'll see that we were very active. This 2008 is when the U.S. had its, you had the financial crisis, the Great Recession. You can see in times of distress, the bank's really very active. And one is sort of wondering in these current environments, will we kind of have a similar rebound as we did back in those times? You'll see that there was a major dip around 2000. We started to decrease around 2013, 14, 15, and 16. We sort of plateaued. What happened during this time was that the bank was authorized, but we didn't have a board of directors. And so we were sort of left in a little bit of limbo until we got a board of directors. Like any transaction that the bank, typically it's over $25 million, requires a board authorization. Now we have a new authorization, a new charter that's good for 7 years. It also addresses this prior incident we had where we were in a lapse of a no man's land without a board of directors. So hopefully we don't have this situation repeat itself again. But this is a good sign for the bank and particularly for our clients. What was interesting here, I'd like to note, is that the Mozambique LNG, you'll see that how our activity in sub-Saharan Africa, Northern Africa, has been rather low until you get to this massive jump in 2019. And really a lot of this is attributed to the Mozambique LNG transaction. It was a very important deal for the bank. It's really one of the single largest authorizations the bank has ever done. And it was really a big deal for us. So you'll see that we've really spiked our support in this region. And what's interesting here too, just the charts, like in the past, we did a lot of sort of smaller facilities. We may have supported some aircraft or transportation for the long term. But here you'll see that this $5 billion majority really is long-term financing in the region. And here just a caveat on that is that this kind of breaks down the direct loan. Most of this is really a direct loan facility. And now sub-Saharan Africa is a big chunk of this exposure of 8.9 billion. In Africa. So this is really important and transformative for the bank. This sort of actually, we're always thinking about our competitors and our exporters to this region. This is, we'd like to see more. You'll see that the Chinese are way ahead of us. So you'll see that the US would like to get, EXIM Bank would like to get more involved and find more opportunities within this region to really sort of level the playing field for our US manufacturers. And just real quickly, this is who I am, as a managing director, but the bank does have a business development officer named Rick Angioni. I've listed him as well because he has a wealth of experience in Africa, and who also can help if you have any further questions after this presentation, and if you want to follow up with us. But EXIM Bank is very excited about the Mozambique LNG transaction. We did see it as very much a transformative transaction in the region. So thank you so much. I'll turn it back over to you.
Thank you, Trey. I know some of you may have some questions for Trey. Let's keep it to the Q&A session. So for now, let's pass on the mic to Mario, who will go through the slides he has with you. Mario, it's your stage now.
Excellent. Nice to meet you all. My name is Mario Fernandez. I'm a partner at Deloitte Consulting, based in Mozambique, and I head up the oil and gas practice here. So I've just given you an overview of who we are as Deloitte. We are the #1 professional services firm currently in the world. We have about 380,000 people. We work in about 150 countries, and we serve a large number of the Fortune 500 companies, 82%. We're quite dedicated to the oil and gas, and have been accompanying the trends in Mozambique since the inception. I'm actually based in Mozambique, so work quite closely with a lot of the companies and stakeholders based here. This is just an overview of some of the services Deloitte offers in the market, and that's what has given us some exposure to what's happening. And hopefully I will share some of this experience with you in the webinar. So generally, it's things around advisory services, managing risk. This is a big a concern at the moment, as you can imagine. How do you manage issues like COVID? And we're seeing a big interest and focus from our clients in this regard. On this slide, I've got a high-level overview of the project for you. If for those of you who don't have a view of what the project is about, it's effectively going to be rolled out in about 4 stages. With first gas with the floating LNG, which will produce about 3.4 million tons per annum. That's the Coral FLNG from Eni. And then in about 2024, we've got Total, which is the lead operator of Area 1, producing about 12.9 million tons per annum. And then ExxonMobil, who's leading Area 4, the FID has been delayed, as some of you may know, but the project is aiming to produce about 15.2 million tons per annum. And then phase 2 trains, which has not yet been decided, but the operators are starting to think about it, would potentially add another 30 million tons per annum, with FID being in about 2024. So of what is potentially on the cards and being planned, that's about 31 million tons per annum. Just to give people an idea of what this is, it's enormous. As Tom mentioned in the beginning, this could make Mozambique the 4th largest producer in the world. Qatar, which is the largest, is currently it's producing about 77 million tons per annum, and it took them 14 years, and it brought tremendous economic benefit for the country and the people. So everyone in Mozambique is pretty excited around what opportunities this could represent. For fun, I've put here a picture for those of you who have not seen it. I took this picture on a helicopter when I flew into the site. It's from March 2020. As you can see, they're already building things, and there's a beautiful beach right in the end there. So very, very impressive infrastructure that is being built. Also, just as a context slide, this is how the areas are structured. So we've got Area 1 being led by Total as the operator, and we've got the EPCs who are going to be building the infrastructure, largely led by Saipem, Chiyoda, and McDermott. And then on Area 4, it's being led by ExxonMobil on onshore and Eni offshore. And we've got the EPCs, namely Technip FMC, JGC, and Fluor. What I wanted to talk to you a bit about was the opportunities that exist in Mozambique for companies who are interested in investing. Just a couple of points that are worth mentioning. Projects like Total, and this is publicly available information. Total for Area 1 has announced that it's targeting to spend about $2.5 billion on Mozambican-owned or registered companies. So this is quite interesting because it allows for foreign investors who want to come into the country and invest in Mozambique with local players or establish operations in the country. This Area 1 project has already spent about $850 million over the last 5 years and is targeting, as I mentioned, to spend about $2.5 million. I think what's important and might be on the back of your minds are what are the priority industries that investors could look forward to considering. So we've got a matrix here on the left of this slide, and what it shows are some of the opportunities where at the bottom right we've probably got the lower value but highly mature markets, which is typically where you see local players in Mozambique get involved because it doesn't have a lot of technical complexity. And we're starting to see some participants in this area, in areas like food and water supply, accounting services, and general consulting. Okay, where we believe this needs to evolve to, and it's the opportunities for foreign for foreign direct investment, is these higher value, is upper quadrant, which is higher value and more mature investments. So some of these priority industries are things like civil construction services, transport and logistics, and we believe this is where the real value is going to be developed over the next few years, and represents significant investment opportunity. Given the low maturity of some of the industries in the country, we think we will probably see in the future a lot of collaboration between the government, operators and EPCs, local companies, the business associations in Mozambique, as well as any foreign investors who are interested in invest in some of these value chains. We think, for example, one of the key challenges will be around, as an example, civil construction. These value chains and the opportunities are not well understood, and there will be a need to identify the gaps and opportunities, and for businesses out there, both local and foreign, to try and strengthen these value chains in order to ensure that they are providing adequate services to the project. Numerous opportunities. I think another thing that's worth mentioning around this list of opportunities is what's being done currently by these big operators and EPCs to develop and to close the gap on the skills and the local businesses in Mozambique. There's a number of plans, for example, to establish the Enterprise Development Centers, EDCs, where the objective is to build capability, expose these local companies to international OEMs and expertise, and promote this collaboration and certification, which is a big requirement from a lot of these big capital projects, is that these companies have the right level of certifications in order to provide services. So we're seeing that these things are starting to happen and present opportunities in the market. Secondly, I wanted to share a bit with you about what I believe are some of the key challenges faced in the market and for large capital projects like this. There's been a couple of examples already in the country where there have been large capital projects, investments, mostly in the extractive industry space, but the value and the expectations was not really met. And we believe that critical to sustaining the value that is and the expectation that everyone has of this project, it will be critical to drive the concept of shared value, and this is just building on the lessons from the past in the country. And the concept of shared value is how can both shareholders who are looking for a return, a financial return on their investment, government stakeholders are looking for return on the country, and citizens who live in these remote areas of where this gas was found or in the country itself achieve the kind of benefits that they are looking for. And this is a complex thing of matching and balancing those expectations. Very often we see that companies tend to do the tick box compliance approach, and what we believe is really necessary is this concept of shared value where you go beyond some of this. In terms of the critical thing to succeed here, we think it's important that these companies, government, and so forth create a platform in which collaboration can happen. That the government creates the right policies around employment and procurement to ensure that that companies are incentivized to invest in local procurement and so forth. From the operator's perspective and the companies building the infrastructure, it's important to be top of mind, to be relevant to these communities, and to really develop a concept of shared value and have processes in which you measure, you effectively measure what returns, these social returns that these stakeholders are all looking for. This is often not very well established. It is easy to measure the financial return, but quite another thing to measure the socio-economic return in a holistic manner. Thirdly, the third topic I wanted to talk to you about was around the concept of the future of work, and what do I mean here? Challenges like COVID-19 are really disrupting the way projects are executed, and are forcing companies to plan on how they will operate in this new normal. And in order to do this, it will be important that companies rethink how work will change in this new normal. As an example, how do you enable effective remote supervision? It's one thing to work in a desktop type job. It's quite another to build the infrastructure of the magnitude that we were talking. But the same restrictions that we are all facing in terms of challenges like COVID are being felt on large projects like this. So I believe a big challenge will be, how do you redefine how work is done? How do you do remote supervision? How do you define new roles and responsibilities for the workforce that is there? Probably you don't need to have as many people on site, and you have to adopt concepts of social distancing. How do you redefine these roles, and what tools and technologies will you need to enable this kind of new reality of the future of work? So we think this will be critical. What will come with this as well will be that these companies will need to rethink how, what tools and policies and labor policies will they need to put in place in order to enable these future work teams. Lastly, I wanted to talk to you a bit about innovation and what my views are around where we see the disruption going forward. And as you all have probably heard, necessity is the mother of invention. And what we're seeing now is with things like COVID, this is really being accelerated, whereas before it was really just a nice to have and a future consideration. Innovation is really being driven, and we think digital is going to be a key enabler here. We're already seeing, to give you some examples, for example, on this construction oversight that you see in the image here, there is already a need for companies to do some video analytics and see if social distancing measures are being adhered to. Are people detect temperature differences of the workforce on the ground and determine whether there are signs or not of illness and whether people need to be isolated. So concepts like this that we all thought were very futuristic are now a reality and being thought through as real tools to ensure that the project continues to be delivered on budget and on schedule. I think other things we're starting to see as well is a lot of these safety analytics on how are people wearing protective gear, helmets, etc. Video imaging where you can process and detect if a person is wearing protective gear or not, and then take corrective action. Another big innovation area that we're starting to see is around sentiment analysis. And I talked to you earlier on about the concept of shared value. And where sentiment analysis is all about how to use technology to collect and measure the pulse of your workforce, of your communities that are impacted by the project, and quickly ideate and innovate with them and understand what their needs are, so that you can quickly adapt your actions to that. We see that as really the future, the ability of these companies to be sufficiently agile to adapt to the changing needs arising from challenges like COVID and so forth. So sentiment analysis is all about measuring that pulse of all your stakeholders. Lastly, in this innovation world, we see this concept of workforce engagement being critical, especially in this world of remote work and remote engagement. On a big construction site like the one up north, is how do you gamify the way performance is measured, the way employees engage and report on COVID-19 happenings, and be able to quickly trace who they've been talking to and interacting to, so you can quickly intervene if required. Lastly, in this innovation topic, I just wanted to highlight that I think the key to all of this to succeed will be the organization's abilities to be able to leverage on big data, especially the large volumes that solutions like what I mentioned will require, as well as the complexity of processing this. So we see this as the big trend and a whole lot of opportunities for innovation and new entrants to support these mega projects in being delivered on time and on budget. Thank you. That's the end of my presentation.
Thank you very much, Mario. We now have Paul, who is going to give us some of his views on some of the same topics, but he might have some other insights. Let's welcome Paul.
How's the volume? Thumbs up if the volume's okay, is it?
Yep.
Volume okay? Great stuff. Yeah, apologies for the late arrival. In a tribute to bank security, Livestorm has not been able to be accessed for 24 hours, despite multiple IT guys. So I've had to borrow my partner's laptop, who's in a different industry, should we say less secure. I'll try and whip through it, and I've obviously got no idea what people have been saying. But in essence, where Mozambique is at the moment is it's largely COVID unaffected. You can't say that about many areas of the global energy market, but Mozambique and COVID is really almost a blip, I would say, almost a blip given the public domain. So I'll try and run through about 6 or 7 topics in about no more than 5 or 7 minutes. So we'll give it a go, and I hope you admire the T-shirt. Mozambique is really 10 years into roughly a 22, 23-year journey that will take it through to the building of multiple trains, probably about 90 million tons, by about 2032, 33. A number of issues have been talked about, no doubt. So I'll focus on what probably is the key issues for the next few years. First of all is regional integration. I have no doubt personally that Mozambique will become to Southern and Eastern Africa and the islands pretty much as Gazprom is to Eastern Europe. That is the reliable gas supplier for a generation. As part of that, technology will play a key role. Small-scale LNG, I'm just giving thumbs up to my other half. Small-scale LNG is going to be vital in terms of taking LNG to those markets. Local content is going to be absolutely crucial. So far, you have the 2 onshore deals pledging $5 billion local content. That's a third of the country's GDP. Local content never goes down, it only goes up. I know it was referred to. So building a industrial, logistical, commercial structure, including agriculture, on a regional basis is going to be absolutely vital. And then the last sort of headline point is one of sovereign improvement. It's not very well known, but even today, according to Standard & Poor's, Mozambique's sovereign credit rating in US dollars is only 4 notches below that of South Africa's, where I'm sat today. So over the next decade, almost certainly as the LNG comes online, Mozambique is only going to climb. So just dealing with the deals in about a maximum of a minute each. As we generally understand, Coral is more or less on time in terms of completion, largely unaffected by COVID in South Korea and Singapore. So we expect third quarter or thereabouts of 2022, it comes online. MLNG, I won't say much because Trey was talking. It's now public domain that the financing has more or less been agreed and finalized, and signing will hopefully happen very soon. Standard Bank was absolutely proud to be involved in the financing in a very large way, and our involvement goes all the way back to 2014 with a macroeconomic study. Rovuma LNG has been talked about by Exxon in their press release of the 7th of April. Also a very good article of Upstream in a couple of weeks ago on it. We expect Rovuma LNG will make good progress in the second half of 2020. Not just COVID, but it could also be a beneficiary of the reduction in EPC prices that have followed the $90 billion cut in global capex. And potentially also there may be some progress on unitization between Total and Exxon. What is extremely exciting and moving at almost warp speed is LNG imports and regional LNG trading and gas sales. It is public domain that Gigajoule have partnered with Total on the Matola FSRU, which is just the other side of the bridge in Matola Harbour. We expect this is going to be Africa's first landmark FSRU transaction along the lines of some of those you get in Latin America or land-based terminals in Europe. What is making this project particularly exciting is not just the timing of multiple LNG developments in Mozambique, the involvement of multiple IOCs in the same, but it's also now public that Sasol are considering the sale of the Romco pipeline, was reported the other week. Clearly, the Romco pipeline, which is only 80 kilometers away from the Matola FSRU, offers a superb opportunity to take LNG into South Africa, which has been renowned as an energy short market for about the last 12 years. So that is extremely exciting and is something we think will move quite quickly in 2020, irrespective of COVID. Then we touch on the unitized deals. Nobody quite knows what's going to happen yet with the unitized deals. Certainly Prosperidade field will be developed. It's in its early 40s. Mamba is a very large field, as we explored in the macroeconomic study. There is a unitization agreement in place. One would assume that Total and Exxon are looking to explore opportunities. But if those opportunities are taken, then Mozambique going quite quickly from round about 31.5 million tons once Rovuma takes FID, going through the 40s and beyond is very possible given the economics of scale of unitization. And then just the last couple of points, and then I'll pause, is obviously the very topical areas of COVID and insurgency. One of the things we would always recommend is we would encourage audiences to look at the public domain sources on Mozambique. Mozambique is quite well covered, to be honest. It is not particularly intransparent in terms of reporting. The Club of Mozambique, Zitamar, and Joseph Hanlon's weekly newsletters. If you don't know Joe Hanlon, he's been the English language world's leading academic expert on Mozambique since the 1970s. All of them publish daily or weekly. And it's public domain that there have been some COVID incidents at the site. They've largely been kept under control. There has been some ensuing community issues and also in a couple of other locations. But IOC is obviously in line with all of the global best practices, are making sure that the COVID doesn't spread as far as possible. And on the insurgency, again, this is fairly well covered in the media with a little bit of a time lag. We would generally recommend don't look at the BBC, who cover insurgency with a story that's 6 weeks old. Probably you're better off looking at Zitamar or Club of Mozambique. And in essence, what you have is a multifaceted, complex issue which involves topics as diverse as religious fundamentalism, heroin smuggling because your primary route to Europe has been cut down, provincial isolation and rural poverty. That has coalesced into what's been known as the insurgency. For a while, it wasn't particularly talked about. Now it's been talked about and more importantly, been acted upon by the government as well. So with some private sector report, there have been some recent military successes, and the most recent developments are a coherent and consistent SADC community methodology to tackling the insurgency. But from our perspective, it's clear it won't disappear overnight, but the type of investment that we've talked about in the studies and the deals, roughly about $125 billion of FIDs by the mid-2020s, can hopefully lead to sustainable prosperity in Mozambique. So I'll pause there. Thank you, and again, apologies for being late.
Thank you very much, Paul. I appreciate everybody's enthusiasm on asking us questions through the platform. But first of all, I wish to just put the question out there for the panelists. Basically, a lot of these enthusiasm involved in Mozambique, I feel it has to be put into a perspective of the current LNG market, which we're facing now. Before the COVID-19 hit, most people were expecting rebalancing of the oversupply situation by around 2024. And with the COVID-19 situation, a lot of people actually are expecting the oversupply situation to persist up until 2028. And we're expecting no FID this year from the US projects, which we actually last year people were expecting multiple FIDs this year. And currently with both the term price at roughly $5 per MMBTU and spot price at about $2 per MMBTU, no project in the world can actually sustain on such economics. So I just want to get your feeling on this. How are we looking at the challenges these the Mozambique projects are facing, especially where nobody is projecting above $5 price for LNG before 2024. And I believe for these projects, when they were FID'd, the LNG price was much higher. So can we have some thoughts from you on the challenges of the return on the investments? I think any of you, if you can chip in.
I'll kick off then, because we've been heavily involved in it. Probably the best way to talk about it is simply to refer to the public domains. Woodmac's public studies based on information, a lot of which is the EPC contract, as was, always had the break even something like $5. One can assume they're less than that. And if you look at GALP, which is Rovuma LNG, not Mozambique, tendered slightly later, they have an NPV10 break even round about 450 or so. So even going off the public domains, or for that matter, Total's investor disclosure of last September, which talked about the variable cost to get Mozambique LNG to Asia. The economics do work, and we believe that's justified by the commitment of large parts of the capital markets to Mozambique. It's probably been mentioned already, so apologies if it has, but Mozambique really has a couple of three unique aspects to it in terms of LNG and why volatility doesn't really affect it. The first one is the obvious one. It's bang in the middle of the map, whether you use Mercator, well, if you use the Mercator projections, ideal for Asia or Europe. Secondly, you have a large blob of gas in a single location, around about 150 TCF. And thirdly, Mozambique is non-aligned and really contributes to security of supply in other jurisdictions. So those non-price factors must also be considered on top of the underlying economics.
Thank you very much, Paul. I have a question for Trey. So which areas do you expect to gain experience during this process of financing the Mozambique project? And would you say these experience would be important for you to consider future projects in Mozambique and to a wider extent, Africa?
Yeah, that's actually a great question. I think for EXIM Bank, I think it was a challenging project to say the least. I have to follow up with my colleagues here. It took a while to get to, I think, a authorization for the bank. We were involved in this transaction, I actually think since 2012 is when Anadarko first came and spoke with the bank. And when I presented the transaction to my board, I always joked that I had no children and now I actually have two. So I really need to get out of this transaction and stop producing. But one of the challenges I think for us is been, and I think it's getting better, is working and getting the idea of just the project economics, working with the local government. I think understanding what was needed for project financing and what is needed there's actually, it's probably in the public domain, there's actually a government guarantee. I think that's pretty critical. I think Mozambique itself has changed, a lot during this time. And there's been a lot of disclosure about pressure and transparency from the government. I do see that hopefully improving over time. And I think that will really help ECAs and other financial institutions come in, transparent with respect to the government, transparent with respect to how approvals are done.
I think we could have a question on regarding the investment in the Mozambique. So besides the oil and gas industry, do you think you can make some recommendations on international investors on which other industries you think could potentially having any, say, synergy around this, such as, developing local talents, etc.?
Yeah.
Do you have any recommendation?
I do actually, as I saw some questions come through, and the reason I mean like transparency in the government. When we started, the whole tuna bond scandal had just erupted, I think, right when this transaction came about. So you see a little bit of like the reaction with IMF. But just to kind of give you where EXIM Bank is, we actually were not open into financing in Mozambique unless under what they call a footnote 13 is how EXIM Bank looks at it, which means you can only really finance with respect to project financing structures. So you have to which means you externalize some of the country risk. So that is sort of focused where EXIM Bank has looked at transactions in Mozambique, has been with respect to a project finance basis. We actually are now, we are actually starting, one of the comments is we have looked at other industries now starting to come to us. There have been a couple of cables, telecommunication transactions, we're starting to open discussion on. In addition, we did have, EXIM was involved with respect to the Exxon Area 4 deal. But in addition to oil and gas, other industries would be telecom and actually mining. There's been a couple of potential prospects with respect to mining. I'll say for the bank that it looks like we're starting to look at opening up short-term transactions, less than 7 years. My particular division doesn't do that, but they're starting to look at particular footnotes. So that actually is encouraging, actually.
Thank you very much.
Tom, if I can make a comment as well, Tom. In terms of the investor interest in Mozambique and the other sectors, it's absolutely enormous. Just talking financially for a second, the positive impact of the LNG on the sovereign is massive. So debt to GDP is plus minus 100%, $15 billion debt, $15 billion GDP. Clearly, production of LNG on the scale that is coming through, realistically a minimum of 31 million tons, is going to blow through the debt pretty quickly and lead to a high growth emerging market. And the numbers we've put down public domain, which we stand by, are roughly 8 to 10% real GDP growth from the LNG time onwards. So we expect some of the high growth areas, as well as what Trey's mentioned, Agriculture is particularly exciting. Tourism is another one which really could kick off in quite a big way. The maritime industry is also pretty exciting too. So even some of the non-obvious areas, non-LNG related, are really likely to benefit in terms of foreign investment. So we would encourage people to take a good look, obviously, once the current COVID period is finished.
Thank you, Paul. I think
Right.
there's a question.
We have about 4 or 5 minutes left. Sorry,
Okay.
Dex. Just we have about four minutes left on Q&A. So yeah, let's try and pack as much in these final minutes as we can.
Okay. Yeah. So very quickly, I think this question has a lot of interest. So could you say what are the impacts on the recent insurgents in the region, and is that why Exxon hasn't taken the FID? I'm not sure which one of you could answer this question.
I can have a go at the public domains. So Exxon outlined their thinking around Rovuma LNG on the 7th of April, which essentially just said, you know, the project has not taken FID in 2020, but is still very much in the agenda, and they're exploring synergies and cost reduction. And Standard Bank doesn't have its own view, but we generally think that the Upstream Online article, which talked about a 2021 FID, is probably about right. And it's likely to be a lower cost project given the CapEx that's been removed. The insurgency I talked about a bit earlier, but the specific issue of geography always needs to be borne in mind. Mozambique is an enormously long country, enormously long. So it's important to know where the insurgency is near and not near. The insurgency has generally been about 100 to 150 k's, as far as 300 k's away from the site. The site has its own protections, defences, its own security arrangements. So we don't anticipate there will be a military threat to the site in time. But what is obviously super important is what's known in the jargon as hearts and minds, which is the overall communities in the regions of Mozambique work closely with the oil companies, their contractors, and everybody who's invested in Mozambique, such that the future of Mozambique is moving away from elements of insurgency to a gradual arena of prosperity for all.
Thank you, Paul. I think we'll take, that's all the time we have for taking questions. For those questions we haven't been able to answer, probably you can get in touch with the respective panelists offline, and you can have some discussion there. So I'll hand it back to Tom.
Great, thank you so much, Dex. And a special mention, I think, for the heroic efforts of Paul to get through and join the conversation today. Very much like swans, we're gliding effortlessly on the surface, but underneath there was a lot of back and forth because of the technical connectivity issues. So really, really glad that Paul could join and for his insights. And to all of you guys, I think Mario has dropped off briefly. I realize this is a huge area geographically as well as in terms of investment. And we could, devote an entire conference to Mozambique. What I would say is, Mario's back. Good to have you back, Mario. What I would say is that Africa Oil Week has just produced its latest fantastic ebook on local content. There's been a number of really good points made by our panelists on the importance of local content. And a lot of questions that have come in from the audience on that. So I would advise you to go to our website and download that for free as some examples of local content working, not just within Mozambique and Southern Africa, but other examples around the continent. I will check with all our speakers today to see if we're able to release the slides that they've shown. I know there's a lot of interest from the audience out there and some fantastic data shared. So thank you very much for that gentleman, but I'll just check to make sure that everyone's happy that that can be released, and we'll be able to give that to our audience as well. We've now reached the time, I'm afraid, for this 1-hour inaugural webinar from Africa Oil Week. Once again, I'd very much like to thank the people that made this possible and for their expertise and insights. Dexter Wang with S&P Global Platts, especially as it's late at night there in Singapore. Thank you for joining us and for guiding this conversation. Trey Armstrong from EXIM Bank over in Washington, D.C. Unfortunately for Trey, you still have the day ahead of you, but thank you so much. EXIM are playing a massive part in the development of this region, and we really appreciate your direct insights and updates on that. Mario Fernandez, who is based on the ground in Mozambique with Deloitte, some very insightful points raised on the future of work, particularly in the COVID-19 context, and some of the analytics on that, and the clients that you're working with in the value chain. So really appreciate you giving us your insights. And last but not least, Paul Eardley-Taylor from Standard Bank, thank you so much. And please, on behalf of everyone watching, please thank your partner for the loan of the equipment for you to be able to contribute with us today as well, Paul. Thank you very much, one and all, and I hope you've enjoyed this inaugural webinar from Africa Oil Week. Take care.
Thank you.
Thank you.
Thank you.
Thanks.
Yeah, Tom,